Hello, folks. Brandon Chapman with you today. It's the Thea Night video for Wednesday, March 9th, 2022. And boy, today's title is Financials Lead, Crude Bleeds, and S&P Gets Squeezed. As we look at the S&P 500 potentially finishing up over 2.5% in the session with 10 minutes to go, we're towards the high. And it certainly looks like we might be catching a bid. And again, when you think about buyers of last resort, who are they? Generally speaking, they are the shorts. And when you think about what's going on in the market today, financials, one of the worst performing sectors in recent week or 2 weeks, has really caught the biggest bid today, right? So you can see it broke its multi-month support here, was heading lower. We're back in the mode of retesting old support, now new resistance. And so it does make it difficult to get really excited by this move. Now, again, can short squeeze lead to bigger moves? Absolutely, right? Could we get a little more positive news cycle? Could crude oil come down? Could we see it push towards highs back here, for example, or even back to its 41 high? Anything is, as they say, possible. However, looking at the VIX, you'll notice the VIX came off relatively little today. When you think about, as we look at, for example, the SPX here, what is the weekly move? This week's move with very little time remaining on the 11 March expiration here. There's still a 90 plus or minus 90 point range as far as the expected move for the rest of the week. So the point being is, don't get lulled to sleep here, right? We're still expecting a lot of movement going into the end of the week. That could occur to the upside, pushing towards 4,400, or it might occur back to the downside again as we explore lows at 4,200, maybe exploring the depths down here, 4,150 or lower. This is a very, I say unprecedented time. Every cycle is a little bit different, every potential thing, but we have such a tailing together of high inflation, CPI inflation, the Fed potentially raising rates, geopolitical risks, high price spikes in, for example, oil. While it did back off today quite a bit, down 11%, we're only where we were a few days ago. When you think about the amount of movement that we're seeing today, how much of the most recent swing have we given back? About 61%. This is a typical pullback when a move is going parabolic like this. Now, again, does the opening up of increasing supply, pressuring OPEC, and do all this other stuff to increase supplies going to benefit us materially? Well, the realities of where we are right now, just look at where inventories are currently. We are well below where we need to be. This gray area represents the 5-year range of oil supply. What we're seeing right now is what? Supplies are significantly lower. We went from, end to end 2020 around 470, 480. We're now down here closer to 400 million barrels. This was a year ago, nearly 500 million barrels. We're currently, down here at about 411. Okay. Supplies are tight. And guess what? We're generally going to see supplies pick up, but we're not seeing tracking the 5-year range here, right? As we look at production is, for all intents and purposes, domestically flatlined. We look at where we were, for example, in April 2020. We were close to 13 million barrels. We're now producing about 11.6. We're not keeping up with the demand. Supplies have been dwindling now for over a year, going on to summer of 2020. Supplies continue to decline. We kind of crossed the Rubicon here of the 5-year range, and we're undersupplied. So as we look at oil, as you might expect, has anything materially changed in terms of the curve, the backwardation here? It's maybe flattened just a little bit from March 2nd. This is March 8th. The slope of the line is maybe slightly less steep, but we're still talking about a very, very steep backwardation that's positively affecting things. And one of those things is USO. This is an ETF that benefits by the positive roll as we sell this and roll to that over and over and over again, day after day. It's going to create positive lift here. And if we see a little bit of a snap back in the oil, because again, did they have to take profits here to cover other positions? Very, very probable, right? And so again, as we look at USO, we might see things firm up and bounce here in the coming days, 2 weeks, as the supply situation has not corrected. But for today, if it bleeds, it leads, right? Crude is bleeding, and financials today are leading, and the S&P is getting squoze, right? As the worst performing areas are snapping back. We're seeing at the moment, actually, XLS kind of fading a little bit. And this is something you might expect. Now, in some trade that occurred today, I forget the expiration month here, but I think it was 18 March. Out of the money out here, for example, at the 38.5 strike, there's some decent amount of buying interest here. Could have been rolling down to this strike or rolling up, whatever, right? But the point is, we are seeing some expectation or optimism in financials today. But again, it's a 38.5 strike. We look at where 38.5 is. It's up here basically at the prior high. But again, I'm not necessarily buying that, right? I think there's a real chance that we start to roll over here relatively quickly. But could we see a further squeeze, push it back towards the prior high of March 3rd? It's very possible. We have a significant print here, 1.28 million shares traded in one print, 37.34. This has acted as support and then resistance. Again, this is going to be a sticking point. If we can take that out, we might have a chance of rolling back to another print at 38.50 from February 28th. So again, those are some levels to watch in financials. But again, are bonds participating? Look at TNX today. We're going higher. Generally speaking, would benefit, all things being equal, financials. But we're also on the cusp of the Fed raising rates by a quarter point in their March meeting coming up relatively soon. So we look at TNX up 0.76. TYX is only up 0.58. Again, selling in long-term treasury bonds 30-year. But again, you compare the 5-year and the 10-year. Sorry about that. 5-year and 10-year, what we're seeing is the yield curve is actually flattening, not getting steeper, which generally benefits financials. In particular, if you look at KRE, regional banks, and regional banks are about 3.5% today. But again, looking like we may want to roll over to the downside here relatively soon. Now, we look at some other areas, for example, right? In energy, specifically uranium. Uranium broke out today at 5.7%. URA's breaking resistance. As we look at some of the individual stocks in this space, UEC is one of them. Uranium Energy Corp, right? It's making a really big move since the Russian invasion of Ukraine. Again, as you might guess, we might soften some of our rather draconian policies on nuclear production. And so again, these provide fuel for those facilities. In this case, it was a March expiration, the 5.5 strike out here. Some buying activity there. We're currently about 5. Again, indicating we may retest very quickly the last high back there from November. We look at UUUU, right? Energy fuels. Again, consolidation breaking out today. High volume. They do have earnings coming up here shortly on the 15th. Looking like it wants to get back to the prior high. We draw a fib on the retracement. We're breaking the 61% retracement today. What does that tell you? What does it look like? We may have a chance of retesting the prior high at around 1140. And today, what you saw was a March expiration on UUU. It was the $10 strike price. Again, $10 strike buy here, potential of going in the money, pushing towards 11 in the near term. Finally, CCJ. CCJ today, again, breaking out. We look at the retracement over this downtrend here. We've already broke out of the 61, but this really cements that. Looking at near-term potential to 28.50, but again, maybe more. Again, if we start to change our policies towards, and there's the bell, start to change our policies towards these companies, we could see significantly higher uranium prices and significantly higher, we'd have to go back a bit further here, 20 years, significantly higher stock prices in these uranium names, potentially maybe doubling further just to get back to our 2007 highs in CCJ. Are we going to see that big of a change? It's hard to say, but again, it's interesting to look at. Some other stocks here as well. EFA. So we think about some of the bullishness in the market, and boy, you start to temper it. You look at EFA, nice bounce today. We basically closed the gap there, but very, very significant trade today for the April expiration, and you're looking at a downside spread here of what? Of 65, 58, Long put vertical. Again, 58 is way, way out there. But again, is it possible we could test this level by when? That's by April's expiration in 36 days. With all the stuff that's going out there, could this be a hedge? Absolutely. Is it priced well? Look at the volatility. You're buying 37, selling 50. It's priced very well as a downside hedge or a spread. So again, something to consider either as a trade or possibly even a consideration as a hedge. And when we think about oil, it's not all bearish here, right? We've pulled back. Let's look at WT offshore. This really kicked off the breakout, for example, end of February. And then we saw the domino fall with rig. That broke out on March 4th. We're seeing maybe some leadership coming into WTI here. Again, it's an offshore drilling, not onshore. But we look at the trade tab here on WTI, and we've got an April expiration, 11,000 contracts, mostly bought at the $6 strike price. Again, $6 gets you back to here, but the point is you're seeing into the selling. You are seeing some bullish interest come in, although we'll kind of juxtaposition this with what's going on in XLE today, pulling back, spinning top. But guess what? There were some bearish trade in here. March 72. So we come in here March. Got to scroll up here. $72 strike in here. Again, kind of buying some puts here. Again, could it be a hedge to some of these bigger moves? Absolutely. But there is some concern that near term we could pull back. But remember, with oil and backwardation, the risk is, of course, the upside. Couple little points I'm going to wrap up with here. IAA is an example. Nice bid today. On this activity right there. There were some selling going on for the back month in July, a little bit further out of the money. Net, it's a bullish trade. And look what happened when this thing got filled to the stock price. We're going to go 1 day, 1 minute, 1 day, 1 minute. And notice right there when that thing kicked in. Look at the breakout here. We're seeing follow through stock buying as well. And finally, we'll end with SKX. SKX. So again, we're catching a small bid here. A decent bid today, I guess, 2 consecutive up days. And then you see this little spread here, 38, 43. Not really super beneficial in terms of the vol structure, but maybe indicative of what? A little bit of interest looking at the price of this stock, possibly getting back to, let's go back here, to 43 in the near term. As we look here, 43 is about that point. Probably close to the 61% retracement of the downtrend. So again, there's people placing their bets. We got resistance at 40. If it takes it out, we could readily go back to 43. So again, you got to position yourself to go long or short, depending on where we go in the next couple of days. Hope this gives you some insight. Anyway, you have a great one. We'll see you back next week.